During the last episode, we talked about the impacts of inflation on the market. This time, we're going to talk about the unemployment impacts on the market and why it might be the last shoe to drop. So stick with me. My name is Brian Cannon, and welcome to Markets in 5. Let's start off with a quick update on the S&P 500. So we've been talking about this up-channel trend and how it kind of broke it to the downside, actually pierced the 200-day moving average. A couple days later, popped back above it, and so it was able to recover back into this up-channel, which is good, and was also able to break this short-term kind of downtrend channel. So technically speaking, everything looks really good. RSI is positive, above 50. MACD is crossed up and now very positive. So everything looks really, really pretty good at this point. So, we might look for a little bit of an overbought indicator at some point, but that's more than likely, unless there's a major shift, probably just a testing of certain technical levels, but as long as they resolve themselves to the upside, again, everything looks pretty good at this point. So as we wrap up the last couple months of the year, it's important to maybe take a look at, historically speaking, how the S&P tends to do during the last 2 months. And historically speaking, it does pretty well. High levels of success with positive numbers. So in fact, November tends to be one of the better months. December, not so much, but generally speaking, it is positive. So that's a good clue for kind of how this year could wrap up. So I showed this chart in the last episode, so I won't go into great detail, but you can see, again, the takeaway here is we've never had historically speaking, a bout of inflation without a secular bear market, and we haven't had a secular bear market without inflation. So right now we currently have inflation, but keep in mind, you don't know you're in a secular bear market until you look back, and it could be years until you realize, gosh, we've been in a secular bear market for a while. So I would say that we're probably there. So the question is, how long is it going to last? And, is it for sure a secular bear market? We'll find out certainly in years to come. But one other clue that we want to look at is unemployment. So when we take a look at unemployment relative to the stock market, historically speaking, when we have a rise of unemployment, it usually coincides with a drop in the market. So let me get out of the way here. But as you can see, that unemployment is starting to tick up a little bit. So we want to keep our eye on that very, very closely. I think the next chart will be a little bit more revealing as to why. All right, don't get scared. This is the same chart. We've just added in a few more metrics. So it's still unemployment, it's still the S&P 500, but we've also added the yield curve in. And we've added periods of, where the yield curve is inverted. So this area right here is essentially when the yield curve goes below zero, right? So in other words, short debt is paying more than long-term debt. And so when you have a yield curve inversion, it's highlighted here. But what you'll notice is that after a yield curve inversion, once the yield curve starts to normalize and head back positive, it's usually, again, followed by a recession. So we haven't gotten there yet. The yield curve is not positive yet. It's still inverted. But what you'll see is when that happens, you also have a rise in unemployment. And so I think unemployment could be the last shoe that drops. And we really want to pay close attention to that. So if we see a lot of layoffs coming up and the yield curve is normalizing again, that's typically a recipe for a recession. And so, I don't know if it's going to come and to what degree it's going to happen. All I know is that over the next year or so could be a very, very rocky, volatile ride. And so it's going to be really important to kind of pay attention to the risk that you're taking and work on ways to mitigate that risk. So in wrapping up, you can see that there's a good chance that the market can finish the year on a positive note. But, based on all of the indicators, the unemployment, inflation, everything else, unless there's some strategic changes, I think next year is going to be a real challenge. And so it's going to be real important to be very active and protective in managing your assets. So if you have any questions, give me a shout, and I look forward to seeing you on the next Markets in 5.